to take you to Washington in the United States of America, because the spring meetings are underway and Ghana is crucially in need of that $3 billion bailout support from the International Monetary Fund. But it appears from the perspective of the fund itself, it believes that time is running out and that developed nations would have to quickly subscribe to the external debt exchange and restructuring for the Republic of Ghana. It's been part of the issues that came up at the press conference addressed by the IMF boss, Kristalina Georgieva, and the boss of the World Bank as well. They've been addressing the press on a number of issues.
A significant inflation problem. That means central banks have to continue to keep interest rates higher to combat it, and that is on the way of restoring the prospects for robust growth. We have seen that this rapid transition from low interest rates, abundant liquidity, to high interest rates and much less available liquidity has exposed vulnerabilities in the financial sector that made the task of policymakers even harder. So in that context, what we are projecting for this year is, despite the remarkable resilience of consumer spending in the United States, in Europe, despite the uplift from China's reopening, global growth would remain below 3%, as we projected it earlier this year. And what is more concerning, it would remain around 3% for the next 5 years. That does not give us high hope for meeting the aspirations of people, especially poor people around the world, and most importantly, poor people in poor countries. Let me stress 3 issues in that context. The first one is that this picture of growth is divergent. There are emerging markets that are doing better. But for frontier markets, for the poor countries, the future is not so bright. And in terms of income per capita growth, poor countries would remain below income per capita growth in middle-income countries. Dangerous divergence. 2, we have been wrestling with one crisis after another, one shock after another. And that has pushed on the back burden the longer-term agenda of structural reforms that are paramount to uplift productivity. And with productivity remaining low, the prospects for growth are low. And 3, the ropes that tie us together have become weaker over the last years. Fragmentation is deepening, and what it means is that what has generated tremendous impetus for growth and prosperity over the last 3 decades, an integrated economy, is being negatively impacted. We have done research at the IMF that shows that just the costs of trade fragmentation can run as high as 7% of global GDP over the years. So these meetings are an opportunity for us not only to talk about the immediate priorities of restoring price stability and safeguarding financial stability, but also about the longer-term prospects of growth and how prosperity can be an achievable objective for the lower-income countries. Which takes me to you. How do you see that?
Exactly right. And as we look at it, the elements of growth into the future, it's important that there be more investment investment in small businesses, in new businesses, and that means a flow of capital. And a worry that we have for developing countries is the capital flow right now is out of developing countries. So for many of the developing countries, it looks like they're in a phase of decapitalization rather than recapitalization. That goes with your point that instead of having convergence, meaning people with lower incomes growing faster than people with higher incomes. So convergence toward a higher level, that's not happening right now. It's actually a divergence, and that's gravely concerning. That means inequality, that means fragility for countries. And we see more countries falling into fragility. One of the concerns with with high prices now, high prices are being applied.
Well, so let's explore the data as we have it and what the implications will be. Let's start off with you, my colleague, of course, Isaac Ofieje, data analyst, sharp guy, of course, here to help us with the figures. So, crucial days for Ghana. How much time do we have?
Well, in fact, we've actually missed most of the deadline we set for ourselves. We've missed the March deadline and the previous one that we set. Now we want to reach, we want to be able to reach the April deadline and probably May. Some are saying by mid-May or the first week of May, we may have the IMF, board level approval. But one thing that is good news for us is that if you look at our external debt that we are restructuring, it looked as if it was China versus the big guys. Right. The big guys in the context of Eurobond borrowers who had about 13 billion in terms of debt with us. We have the multilateral guys who are about 8 billion and other creditors. They were all saying that without China at the negotiation table, we are not ready to be part of these whole talks. That is why it looks as if we are majoring in the minor, just like Professor Bokrin put it, because China has now become very important. And China, all the restructuring talks we are actually embarking on is contingent on China's participation. So without China's full participation, other creditors are not willing to play ball. But we just know that China has agreed, to come to the negotiation table and restructure their debt, which is almost $2 billion. This is actually the reason why we are seeing, we are actually seeing that we may have the board level approval even without restructuring the 13 billion euro bond loans that we actually owe. We are now also seeing multilateral guys coming on board, other creditors also saying they are ready. It's all because China is now willing to participate. It looks as if you look at all the debt talks going around in developing countries, for instance, China is more or less like the missing piece, the most significant or important piece. They may be very small, but since most of the talks are contingent on their participation, everybody will want China to be at the negotiation table to fast track the whole, debt talk.
Okay, let's talk about the G20 position and why that is crucial now. How crucial is it, first of all, the intervention by the G20?
It is, because if you look at Chad and if you look at a country like Sri Lanka, they were able to get the IMF board level approval because of the participation of the G20 framework. We had news that Ghana had made, some progress with the G20 common framework, but just the recent African Pulse report released by the World Bank, and they said Ghana is yet to actually engage at the G20 framework. It's very important because you find the Paris Club in there. We owe them about more than $2 billion currently. Their participation will be important. They also have the power to influence some of the commercial creditors, like the Eurobond, which they are actually the biggest creditors in terms of the external debt, 13 billion. So if you have their participation, it's an assurance for you, and the IMF is willing or will be willing to give you the board level approval. Chad, they got it fast because they actually got the approval from the G20, and then also there was Sri Lanka. They all started with Zambia, but because Zambia was struggling with this whole G20 framework and China and the back and forth, it took a long time before Zambia got what they wanted.
Okay, and this was reflected somewhere last week or about a fortnight ago when the foreign minister of France arrived here in Ghana. They held bilateral negotiations with President Akufo-Addo, and a key factor she mentioned was the element about China and how the Chinese willingness to be part of the credit committee will make a difference. Kofi, let's listen to that briefly. For those of you who missed it weeks ago, then we'll come back to talk about the figures.
Economic situation. Where is all of us? And by Club of Paris, but not only. Also the 22 members of Paris Club, we discuss how we can help, how we can support the government of your country. And in this case, of course, have to make the restoration of the external debt.
Apologies for that, but definitely we know what she said, and we can just sum that up for you. The fact that she believes that China is crucial in the question of getting that IMF bailout, a reason for which there'll be a need for a quick intervention by China to be part of the credit committee. That's not confirmed now, is it? Not confirmed at all. So we still have to wait. So that's where there's a need for us to break out how much we really owe and how much in debt we are. Let's break down the figures,
so
for instance.
In terms of dollars, we owe about close to 54 billion US dollars. And the most important aspect now is the external component, because we've been able to restructure the domestic debts, and now we are hoping to, restructure the external. This is the reason why it's so important, and why we need to take steps to make sure that we achieve success in terms of this whole debt talks. Because if you look at Ghana as a country, in a year, interest payments alone on external debt that we have is about 1.7 billion US dollars. If you add compensations, charges, and other things, we need about 2.5 billion Ghana dollars to do debt servicing, including principal payments, charges, and interest. And with that, and look at the money we are getting from the IMF, it's about 3 billion US dollars. So if you need close to 2.5 billion US dollars to service your external debt, and IMF is giving you 3 billion.
And you have that on the screens right now, what Kofi is talking about.
So what we're talking about,
the 1.7 billion.
The fact that it looks as if
China on one side.
Debt restructuring is like China versus the other big guys.
Right, so take a look at it. 13 billion in Eurobonds, 8 billion actually for multilateral. We have the Paris Club countries accounting for some 1.9 billion. That's slightly higher than what China.
Actually,
yes, but if you compare that individually in terms of country specific, then we'll say China is our biggest creditor.
China is the only single country that has about $2 billion of debt with Ghana.
Right.
And even if you factor in some of the project loans we've taken from China, like the Sino-Hydro deal and other deals that we've signed with China to get other projects done, the debt is more than $1.7 billion. It's because we've excluded some of these loans or agreements with China. That's why we still have $1.7 billion. So debt servicing to China is projected to go up. And that is why IMF is still insistent that we get China on the negotiation table, because if the IMF program kickstarts, we still will restructure, we still will service debt, but probably it will be reduced because of the restructuring that we may have done. They don't want to give us the 3 billion and we use that 3 billion to do debt servicing, because as a country we need close to $2.5 billion to do external debt servicing alone. So if you are not able to restructure your debt to give yourself that kind of fiscal space to accommodate that 3 billion bailout package from the IMF, the program will just be like a drop in the ocean. Mind you, we are not just looking for the money.
Yeah.
We need assurance also from the IMF to also go back to the Eurobond market. And doing that, we need to make sure that our economy is breathing well again, is in good health to actually go back to the Eurobond.
And let's clarify this, because we need to be certain that the meeting that's happening now is not happening only because of Ghana, because there are other countries involved in this
This is an
narrative.
annual event that we have almost every year. There's spring meetings. We discuss so many things. But this year, or right after the pandemic, things that have been on the top of the agenda has been the issue of inflation, debt restructuring, and then also economic growth, because we have most of the economies and their projected growth being truncated. Ghana was expected to grow more than 3%. Now we've truncated less than 3%. So these are some of the issues that are, of concern right after the pandemic. And you heard Kristalina Georgieva saying that if you look at low-income countries, about 60% of them are, at risk of defaults, or they are on their way to default. And if you look at emerging economies, so about 25%. And it's because most of these countries have racked up debt and are not able to pay. The only difference between our current IMF program and what we had in 2015 was that this time around, our debt levels are unsustainable. It means if you do an analysis of the debt we have and our ability to pay, we can't pay going forward. So it's different from what we had in 2015, where the whole thing was very fast for us. We're able to get the package and all that. And getting the IMF money, it doesn't mean that right after we get the executive board approval, we're going to start spending the $3 billion. It will come in stages. They will have to come and assess your economy. And at every point that they do the review or the assessment, they'll give you a certain tranche or quota of the money. So 2015, we qualified for $980 million.
That's the first tranche.
That was the entire program, about $1 billion. We ended up only being able to withdraw just 630 or 780, just because we weren't able to do some of the things we're supposed to do. So at every stage of the disbursements, it is actually conditioned on something that you are supposed to do. But one good thing about an IMF program is that it's more or less like you have a new headmistress or headmaster in town.
New king, new law.
Exactly, and
Indeed,
helping you to run your affairs. And the international creditors, they believe in the IMF, and they know that when the IMF is in your boat,
Okay, let's see how that will play out for Ghana. Let's check out more on what's happening with the spring meetings. My colleague George Wefe is joining us from Washington. George is with the Joy Business team. George, thanks for joining us. Crucial moments for the country. Spring meetings are underway, but Ghana is on the radar because of our application to the International Monetary Fund for a bailout. How is that playing out in Washington?
Well, it's a question that one would say it's indeed a long route. One would say if it hadn't been these external partners coming in to try and put pressure on these creditors to fast track the process, it would have really been a real difficult one for us. You had the U.S. Treasury Secretary Janet Yellen talking about the fact that he will use this week to put pressure on Ghana's external creditors to fast track the process for us. The IMF MD Kristalina Georgieva also earlier during this week spoke about the fact that she is also putting pressure on the creditors to fast track the process when it comes to Ghana's situation. So that is what is happening. Whilst these actors are putting pressure on those who matter, Ghana is also pushing very hard to ensure that we're able to make some progress at this meeting in getting this program. Now, one critical thing that is going to happen today is the creditors meeting that is supposed to happen. That is the Paris Club. And what we understand is that there will be a partial creditor committee being established from the Paris Club that will begin formal negotiations with Ghana in terms of the way forward for Ghana's debt situation. Now, at this meeting, that will get a better idea whether the Paris Club is going to go ahead and indeed cancel Ghana's debt or restructure Ghana's debt. We'll be looking out for more details on that one. Also, the Global Economic Outlook report has been published, and many will be looking out for what is Ghana's position or what is the IMF projecting for Ghana in terms of growth rate. Well, for this year or end of year, the IMF is projecting that we will end the year with an economic growth rate of 1.6%. Now, this is lower than the 3.2% the fund projected for last year. Now, if you compare this with government's own 2023 budget, government was looking at a recording something like 2.8%. So that is quite lower if you look at the fund's own projection for us and even government's own 2023 budget. Also, if you look at the World Bank projection that was published in its Africa Pulse report last week, it was projecting that Ghana will grow at 1.8%. So if you watch these global institutions and their projection for Ghana, they don't seem to agree with government when it comes to the economic growth rate for this year. Some would say that, and so what? Why should we care? Well, it appears that then government projection in terms of revenue, just a lot of things, was based on that 2.8%. So if we are not going to achieve that, that could have some implications for revenue. That could also have implications for some commercial banks, some businesses that were looking forward to Ghana expanding this year. And based on that, that could impact on their earnings and profits. And that could come with some interesting development and challenges for us.
But that press conference is scheduled to start any moment from now. Earlier, there was a session about the global economic outlook. How much of a factor has it been for us, the external pressure, and how it's impacted developing nations such as Ghana?
Well, the external pressure more is favoring government or Ghana, if some would say, in terms of US, in terms of the IMF putting pressure on these creditors that can you fast track the process? And that is why one critical thing is happening. The Paris Club is establishing what they call a partial creditor committee. I know about full creditor committee. I don't know about partial creditor committee. So it appears that this pressure, this subtle pressure behind the scenes engagement is working. And that is why, and that seems to be going in the favor of Ghana. But don't forget about the geopolitics issues as well. Now, we're expecting that China would have been part of the Paris Club in reaching an agreement with government. But it appears they want a separate, more of bilateral engagement with Ghana. And that one also has its own challenges for us as well going forward. So in terms of the subtle pressure, maybe it's working in our favor in terms of us fast-tracking the process to get a board approval in the second quarter of this year.
What are we to expect in the next few minutes?
Well, in the next few minutes, you should expect something come out of the Paris Club, or in the next few hours, we should expect something from the G24 countries. They've been having meetings, which includes the finance minister, as in the way forward when it comes to Ghana's debt situation. And we might be getting some details coming of that engagement as well in terms of Ghana's debt situation. Could they be stronger if they go as a bloc in negotiating with these countries than individual countries? And that could also be coming out of some of these engagements that they've been having as in the G24 meeting, which includes governors, the central banks, and finance ministers across the world.
All right, then. Talking about the finance minister himself, what's been his posture? What's been, by extension, the position of the Republic going into negotiations with the G20?
I think that he's more confident, if you could read his demeanor, because he believes that government has done what they are supposed to do, especially when it comes to meeting the preconditions of the IMF. And also, don't forget that before this meeting, Ghana had gone to China. There's been a lot of engagement behind the scenes. And again, when you even engage some of these Paris Club members who have some reps here, you get the sense that in principle, they are for helping Ghana with the financing assurance. The problem is, how would this be done? That is a sticky issue here. So the IMF board is looking for what they call assurance and commitment, and not a final agreement. And that is what might be working in the favor of Ghana.
And earlier, the IMF boss, Kristalina Georgieva, there addressing the press about a myriad of issues. But what's missing, and what we do not find a clear expression on, is on how African countries can, first of all, build resilience and to sustain the growth trajectory. What's the plan of the IMF on that?
I mean, That is why the fund is talking about several countries from including Africa has come to the fund for support. And this fund or this support is not free money. It comes with some conditions. And one critical thing, even in the Ghana situation, is about these structural reforms. And what these structural reforms are supposed to do is to ensure that never again and build resilience. So in one breath, they are appealing to these creditors to help developing countries, but they also pushing hard on the structural reforms. And that is why the 3 billion package that will come would not be free money. It will come with conditions, it will come with structural reforms that will ensure that never again we will get there as Ghana.
Let's talk about the African position that we're going to listen to now. A group of 24, G24. George, I understand you need to go, but just before you do that, the collective position of these African countries, what sense do you get from it?
Well, the collective position, some of them believe that, yes, of course, where we are in, as in the African countries, might be as a result of how things were not managed. Or some also strongly believe that they got here out of externalities, COVID, and other external challenges. And so it's not fair to blame these African countries of being irresponsible. So if you are in this situation, the Russian-Ukraine issue and all the rest, this is having an impact on our economies. I think the moral duties on these developed economies to also help the African economies to come out of this challenge.
Anyway, George, we'll have to leave it for now. You're going into that address, and we'll be back again to you just to get the latest. George, you have to be joining us from Washington, where the spring meetings are underway. We'll be crossing back as the African leaders prepare to decide on what their collective position will be. But let's talk about that long winding stage of the IMF program that we've been trying to look at. And Kofi, here it is, long list. Well, yes. We have number 8, I see a review there. We'll get to that shortly. But the letter of intent, we've crossed that.
Exactly.
IMF staff assessment, IMF staff report, and approval. I think that's where we're at. And then there's the debt restructuring as well. So let's talk about stage 3, where we are now.
Well, stage 3 has to do with, actually it's about stage 6, where stage 5 actually has to do with the external debt
restructuring. Yes,
that has been the hole that we have to make sure we actually clear before we actually get the board approval.
Right.
So without the executive or external debt restructuring, it will be difficult. But just like George said, IMF will need assurance, not final agreement. So once they have the assurance that most of our external creditors are willing to participate, we may even get the executive board approval before
we are waiting. Yeah.
That is why even Bloomberg is reporting that Ghana is likely to get the executive board approval without a restructuring of the $13 billion.
And that's interesting because George was talking about this whole partial creditor committee.
Exactly.
That's a new dynamic that we're seeing.
It is because we know when these guys are coming in, it's either they are in 100% or not.
Yeah.
But there may be a condition. If you look at what is happening across the African countries, some of the countries were looking for 100% write down. It means they wanted 100% debt cancellation or forgiveness in addition to forgiveness of sins. But they know once you forgive country A of their entire debt,
the rest will make a case for that.
So they are making sure that they tackle each country's situation with a different outlook. The way they will tackle, although Zambia was a template for Ghana, if you look at Zambia's talks, it's somewhat different from that of Ghana. And with China, the reason why Ghana is so confident that China will be on board is because we know the Chinese, when it comes to debt restructuring, are different. They will not agree to 100% debt cancellation. The only thing they will agree to is either you extend the maturity period or you agree to pay more on the interest.
And that puts us
in a very difficult situation. But we have a leverage. The leverage is our mineral resources. I feel the reason why we are so confident that we may get an agreement with China is because already we are in a certain debt agreement with China where We get $2 billion from them to work on our roads. They have access to
the Sino-Hydro you're talking about. Anyway. But of course, the IMF has raised its own concerns about such a barter agreement and how it may not
I know
be sustainable.
The Chinese will not just say, we've agreed.
Right.
Something must give.
Right.
Exactly. You need to come to the negotiation table with something. What are you coming with? Are you going to give us more quota in terms of your bauxite? Are you going to give us access to your oil or gold or whatever? Mind you, China will not agree to restructure $1.7 billion without a condition.
Okay.
So we may have a leverage, but as of now, we may not know what we are using as the leverage to get the Chinese on board at the negotiation table. But what we know is that we may get an executive board level agreement probably by end of April or early May. Okay,
but I want us to touch on the disbursement quickly. Given the fact that, okay, we're cleared and we're running the program, you're talking about how the funds will be assessed and that it's not a free-for-all day for us as a nation.
So I'm using the 2015 scenario as an example where we qualified for, I think it was $908 million. The first tranche that came in was a little above, I think, $300 million.
Then we took another tranche.
We took another tranche. And they all came with conditions. Some of them would have to mean that you need to restructure your civil service to get some of these loans.
And I recall that staff rationalization program and how, of course, civil service will also fight you about that.
And once you miss out on the conditions, hell no, you're not going to get the disbursement. Right. That is why in 2015, we qualified for 908, but we ended up only being able to withdraw a little above 600 million.
Right.
About $300 million we couldn't because we weren't able to do some of the things some of the conditions we're supposed to meet before we get. So the 3 billion, it will give us some sort of credibility, but I don't know how long it will take us to get back into the Eurobond market because that has been our savior for the past 8 or 9 years. Where we've borrowed close to, $11 billion from the Eurobond market. We're taking 1 billion, 3 billion, 2 whatever billion from the Eurobond market. And they were giving us these monies because they were anticipating that we'll be able to generate revenue, but the revenues could not crystallize. And we had this serious challenge with our exchange rate scenario, and then inflation came in, so many things. We missed out on the e-levy target where we wanted to get 7 billion. We ended up only getting 300 million. So many factors happened, and we couldn't get the needed revenue we needed for 2022. But this year, there's still a huge hole that we need to fill, which is the budget deficit, which is almost 60 billion Ghana cedis, about $10 billion. We asked ourselves, $10 billion. Where are we going to get the money?
Interesting.
To fund $10 billion?
But it's, interesting days ahead. But even as government attempts to solve the external problem, then there's a fresh issue coming up around our internal situation as well. The domestic debt exchange, it appears that we're not completely done with the process.
Well, it looks as if we are done, but there's still some holes that we need to cover.
Especially about the payment. We understand that there's a statement that's been issued by the individual bondholders as well.
You see, the whole thing actually affecting our external ratings and domestic ratings, currency ratings, is because of the domestic exchange program. There are some of the creditors who decided not to participate in the restructuring exercise, and governments are obliged to make payments. And some of them, we always, all the time, miss the deadline. And if you do some of these things, it will attract downgrades. And it's affecting us on the local front. And the only thing that was available to government to generate more money to pay people that they were owing was the Treasury bill, where they hiked the rate to about 31%. And now we know the Treasury bill rate has been dropped to about 19%. So where is
the confidence?
Exactly,
Definitely.
because we've lost access to the local bonds market. Treasury bill, the rate was being used to attract investors. Now it's 19%. So you keep asking a lot of questions. How is government going to fund this 50 billion? But we know that once the IMF is in charge, we probably will get some.
Okay, then Isaac Ofeje, data analyst at JoyNews team. You're watching The Pulse. When we're returning.